Welcome back to the channel. As always, if you copy trading, you're an absolute moron and you deserve to lose all your money. And with that out of the way, we're going to look today at an organization called Blackstone, ticker BX. And the first thing that you can see here, I have taken the KKR chart because I've been looking at the finance sector for quite a while, and KKR was one of the peers that I show listed. But I made my decision to go after Blackstone as a long idea. And one of the reasons why that is because, first of all, the fundamentals look pretty healthy at first sight. We get here a premium being paid by the market, signaling greater quality of earnings. The market is willing to pay a greater uh, price for this company. At the same time, we do see some of its peers way down below the ladder, and its closest competitor KKR at a similar valuation. It is also quite interesting to see certain players with, including Blackstone, with a recent uptick in valuation over the last few weeks. Why is that? Well, first of all, we've been having a rotation of stocks out of the mega cap AI tech space and shifting into other areas of the market. Now, because of that, we have seen this recent uptick in valuation in multiple, and because of that, I'm not going to enter this trade for the time being. But I'm certainly going to keep it on the watch list, and I think it could move significantly over the next few months. So as you see, it has moved quite a bit already, having been flatlining really year to date. And if we look at the projections, so let's look at, for example, what's happening with the projections. We can see that EPS is set to pick up on the next quarter, but also start accelerating and carry through higher on a consistent basis. If we look at the price target, you can see that we are higher than the average, and indeed this is an area that would have been ideal to enter, and because we have moved here, I'm not going to enter for the time being. But I'm not at the moment in an urge to add long positions to my portfolio. At present, my portfolio is full, and I'm really preparing myself for what's going to come in the next quarter or so. So with that, you can see that in terms of EBITDA, in terms of EPS, the company has been quite steady, nothing to see here for the time being. But I think that could change down the line. So granted, the momentum seems a little bit overdone, but we have a few things coming over into the market. So first of all, and this is pretty widely known, is that the Fed is expected to cut rates twice this year. We're now ending the month of July, and the market is now betting that the first move may take place in September. And of course, for an organization like this, for Blackstone, this is a company, if you don't know their business model, is an asset management firm, but their kind of assets is, private equity, hedge funds, credit. So interest rates are of massive importance to these guys. Very, very important. And obviously an actual move on the interest rates would significantly alleviate the operational burden that they have been facing over the last few months. So we can expect potentially a move in September, who knows, maybe down the line. But the interesting thing to me is that at the moment, when we look at the month of September for Blackstone, the market is expecting an implied volatility of about 30%. And the same happens when we look at November. So to me, that is an interesting positioning because in November we will be having the election date. So on the 11th, excuse me, on the 5th of November, we will be seeing the election date of the United States. Now I'm taking a bit of a bias here. I'm taking a bit of positioning on the outcome. I think, considering the series of events that we have seen over the last few weeks, that it's quite likely that Trump will win the election. And the reaction for certain sectors, such as aerospace, but also finance, which is the one that we're looking at here, will bolster those sectors. So that is certainly a catalyst that I see. But another one, and this is one that I quite like, is the acceleration of private equity dry powder. So you can see that it has reached new highs in the first 6 months of the year. And what I can see is that we have very strong driving forces with all these three catalysts, if you will: rate cuts, dry powder building up, and election, all leading to the outcome of the election, most likely in early November. So I'll keep this one on the watch list. Like I said, would not enter at this stage. But at the moment, if we really wanted to play this would be one way to do it. We can go long the 150s and short the 18th of October on a 1-to-1 ratio. That's if we were to enter today, simply because the valuation and the technicals indicate that there's little headroom in the short term. Now, likely this will not be the structure that I'll be choosing. I would probably prefer to wait till the price retraces a little bit and then perhaps enter a calendar on a ratio. But we'll see how it goes. This is the structure for the time being, and that's the idea. Thank you so much. See you soon.